Yo, Queen of Credit, I didn't even see your question there. I'm not sure what happened with YouTube. I've been researching on how cryptocurrency lending will affect traditional credit. Have you been researching this? Still wondering, will FICO 10? Yeah, so Queen of Credit, this is for you and those people actually following her channel. And, she's obviously doing a good job as well. But here's one thing that I want to emphasize on cryptocurrency and the lending platforms in FICO 10T is whatever you see the banking system shift towards is usually the adaptation of what are some of the follow-up companies' processes, right? So if you see a lot of people adapting to that, I think cryptocurrency, because it's yet still decentralized and they're figuring out how to incorporate it on a massive scale, I think that to de-risk that in its entirety and to be able to lend crypto on that scale as well, because it has to come from somewhere, you'd have to have a systematic process to de-risk yourself with that. So I think the FICO 10T may not necessarily be the primary concern for a lot of crypto lenders, but rather on a bank level, how to go through underwriting, through fraud prevention, risk, de-risking, and capacity. So that starts with the analysis of an individual based on their financial transactions and records they have. So I think fintech will play a big role on this, which is the blockchain side of things, to see whether or not the client is worthy on a systematic level, first on a financial scale, and then from that perspective, go through some due diligence process where the credit is involved. And that's where perhaps as a secondary recourse, the FICO 10T would be something that's introduced. We're getting a very complex situation here, but I don't want to bore you guys with this and just go crazy, but that's my 2 cents on it, and I hope that makes sense.
It's lifted millions of people out of extreme poverty. One thing that fintech does a great job of is bringing financial services to people who couldn't access them before. Often that means people who didn't have a regular income or a permanent address, and fintechs allowing them to build wealth and escape the poverty trap. A case in point is M-Pesa. It was released in Kenya in 2007 and basically transforms your smartphone into a bank account. It allows users to make and receive payments, make online deposits, all in a secure way, and it gets credit for having reduced crime in a society that used to be mostly cash-based and prone to theft. In fact, since M-Pesa was launched in 2007, it's raised 2% of Kenyans, around 200,000 households, out of poverty, as well as many other people in different countries throughout Africa where it's also used. And we think that all of this means fintech deserves some serious kudos. Number 4. It's revolutionizing the loans market. Looking and applying for a loan is a great example of how traditional banks were drowning in bureaucracy and how fintech has shown us all it can be improved and streamlined for a lower cost. Now it's possible to find a whole range of apps and websites that help you compare prices of credit card loans in a way that banks didn't used to do. That includes peer-to-peer lending platforms like Prosper, Marketplace, and Lending Club, sites for business loans like Cabbage and Lendio, and fintechs that let you apply for mortgages, which take traditional brokers out of the equation and approve loans faster. And in 2016, American fintech SoFi, which helps with student loan refinancing, became the first online lender to get a AAA credit rating. Number 5. They could make traditional credit ratings obsolete. Anybody who's ever taken out a loan knows how your credit rating is the holy grail when it comes to being able to access money. A bad credit score shuts off all kinds of opportunities, and it's difficult to shake off. This is something else that fintech has been busy disrupting. That's thanks to fintech lenders like Affirm, which offers loans to people with bad or no credit ratings and also helps them build up their credit rating. Or Upstart, which uses totally different data than usual, like employment history, to determine how creditworthy you are. And all this means that soon enough, we could be seeing the end of credit ratings as we know them.